Okay, we are recording. Good morning, everyone. I'm going to go briefly through the web page just to show you where the new form is and where the management memo is, and then we'll start directly into the form. What I'll do is I'll go through the report, a portion of it, and then stop, unmute everybody's phone and take questions, and then move on to the next portion of the report until we're finished. We have 3 hours today to go through the form, but I doubt we'll need all of that time. So starting with the web page, this is the CDBG web page, and as you know, you can find the report, which is now online, in either one of two places. You'll find it in the Forms and Reports section here under Program Income. It is the second form right here. Or you can also find it in the Grant Management Manual in the Program Income chapter. Again, here in the forms. Additionally, just as a reminder, this report was changed based on a Program Income rule changes, very significant changes that you all, I'm sure, are very aware of. The changes were based on a management memo, which you will find here, Program Income PI report in our management memo, and it's 1405. I have 1405 opened for us to look at, but I'm of the opinion that I'll bring it up if people have questions directly related to the rules in the memo and show you where you can get that information. So now I'm going to go ahead and talk about the new form. You all should have a copy of this. We did send out an email saying that it was online now. And this is the new PI report based on the new rules. As you know, the main rule being PI first. So the form keeps some of the similarities to the prior form. You put in your jurisdictional name here. It will populate in other places in the form automatically. You also have the option to, we also put in the fiscal year, and we also have revised or not revised and the date. So that's pretty similar to last time, no changes there. And so now the first part of it that I want to go over is the 35,000 rule. We had talked about this during all of our training on program income, that you need to make a determination that you intend to defederalize, which is not the correct term, but you determine that if you have less than 35,000 in program income during a whole fiscal year, that you would identify at the beginning of the fiscal year that you intend to not use it as program income if at the end of the whole fiscal year it's less than 35. So this particular section is where we address that issue. I'm going to give you a number in here, and you can see that that's over 35. So the form will tell you immediately that if it's 35,000 or above, and the rule says 35,000 or above, and I just put in 35,000, it's an error. The only number you can put in there below that, whoops, wrong place. The number you would want to put in here, any number that goes above 34,900, whoops, I did that wrong. Let me take that out. Any number above this number would tell you that you're in error, because nothing above 34,999 can be considered not PI at the end of the fiscal year. I'm going to go over to semi-annual 2, and you will notice that that amount was put in here, so it automatically populated to the next semi-annual report covering January through June. Any money that comes in that's considered program income in the second half automatically would say, because if I put $1 in there, it's now above, and therefore you must move it from this section to this section and call it program income. The next section is the section that's program income. Now, you will notice the form is separated out into Section 1 and Section 2. Section 1 is what's considered program income, and anything that goes in here must be spent first before you spend your grant funds or request reimbursement for grant funds. If you have an approved RLF, then you separate them out into separate accounts, this being the housing RLF, this being the economic development RLF, and this is the beginning balance for program income. So you have 3 accounts, or you may just have 1, you may have 2, or you may have 3, depending on what we've approved. If you choose not to do the 35 rule, then you need to click on no. Just so that we know that you've made that decision that you're not. Then nothing should be in here. And all of your accounting should go into this section, or if you have an approved RLF, into these sections. For the purpose of, and I'm going to go over program income and then I'm going to stop because we're going to have to talk about program income and general admin now together. So I'm going to make this statement and walk through this form here as if you don't have an RLF at all, and that every dollar you have is program income. So I can explain it from that perspective first. So you should have completed by now your report covering the final semi-annual and the whole annual for fiscal year 13-14. And in that, you should have an ending balance of program income and an ending balance of GA. You need to take both of those numbers and populate them into this section here. So this section has both program income, which includes general admin. Now, in this particular case, I've pretended that the whole amount of money available at the end of the fiscal year was $30,000. Of that $30,000, some of it is general admin. So we'll assume that your general admin was $6,000. So the $6,000 is actually part of the $30,000. And the way the form is set up is to allow you to keep a separate maximum available GA here, but know that your total program income, which also includes general admin, is being calculated up here. The way to show you this is, if you notice, I'm going to put in that we received $60,000 in payments. We'll leave the interest earned as 0 for now and just keep it simple and put $60,000 in the received program income. If you notice, the received program income did take out 17% and put it down here, showing that the jurisdiction has a maximum of $16,200 in program income available to spend on general admin. And you'll notice that this number does not necessarily remove out the general admin. So this number includes all of the $60,000 that was received. This means that, in truth, you have $90,000 in program income on hand that must be spent before you can draw down grant funds. Of that $90,000, you have available $16,200 for general admin expenses. We will go over the expense side of this in the second, a little later on, and we will show you where you put your expenses of PI and general admin and how it populates here and here. But we'll do that in a little bit later just to allow us to go through this sequentially. I'm going to go ahead and see if we can unmute these phones and be able to, I'm going to try and unmute everybody's phone now and open up questions. Make it easier, we're going to hear people that they have muted their own phone. Please are there any questions?
Thomas, this is Terry in Calexico.
Hi, Terry.
Hi, good morning. My question is why the change? What is the reasoning behind having to have the balance available total PI and then the breakdown in the general admin? Is there a method for madness here?
Yes, I would suggest that you, Terry, that you have a quick read of Management Memo 1405.
Thomas, I'm sorry to interrupt. Can you ask people to mute their phones because it's hard to hear the questions and responses?
Yeah, I've actually asked them that, but it's not working very well, which is pretty standard. People don't generally do this. I'll do it again. If you are on the phone, could you please, everybody, check that you have muted your own personal phone?
Hold on.
No, I don't.
Okay. So, Terry, to answer your question, please go to this management memo and have a read of it. It gives an explanation of why this has to be done this way.
Okay.
If you have any questions, feel free to call me afterwards or call your rep.
Okay, thanks.
Okay. Are there any other questions?
I sit in front of here, so I often get one before I got in the shower.
No other questions? Okay, we're going to go on to the. We're going to go on to the.
What is
Let me
that?
see if I can get. Okay, I'm going to go ahead and mute everyone. This isn't working for some reason. Okay, I'm going to see if I can move on to the next part of the section.
What the heck?
Good.
I have a few questions.
Okay, go ahead and, so we have a couple of questions that came in on the chat. We're going to go ahead and do those questions.
Okay, so one question is, what if we want to defederalize this year?
So if you want to defederalize this year, you have a report for semi-annual 1 that's due by the end of this January. You will mark at the top under section 1, do you intend to defederalize? You put yes. And then any program income you've received between July 1st and,
I can tell you.
December the 31st.
Good. It keeps I'm muted.
I'm fine, but South is not.
Do that again.
Sure. And I did a quick look at some of that. What it looks like they did do was account for your activity deliver expenses. And so I think that's where the tie-out's going to be. Some of it that get reported on that.
Oh, 100.
So the person who's talking about activity delivery, could you mute your phone, please?
You know what?
Thomas, are you still there?
Yes.
This is Janie with the City of Montague.
Hi, Janie.
Hi. On your example here, you said that 90,000 ending PIGA balance with your example. So the difference between the 16,200 maximum GA available,
yes,
and the 90,000 would be your PI money available for projects?
yes, but in
for delivery.
Yes. So
that would be $73,800.
Okay.
Is that correct?
Yes and no. So the answer is your math is correct. You theoretically have 90,000 available in program income to do for program activities. You're not limited to the amount you said. You can use all 90. The 16,200 is available for GA under two conditions. Condition one is you have costs associated with GA, and condition two, that you haven't spent the 90,000 on CDBG eligible activities, at which point that 16,000 will still sit there as available, but you won't have the cash to spend it.
Okay, so we can't. Go ahead.
I was going to say, so the way to, it probably will be more helpful once we go through the expenditure portion of the form to visually show you this. But that 16,200 is part of your program income and cannot be separated and put aside anymore. But the way the form is designed is that 16,000 stays there unless you spend money or receive money. That number stays there even though the 90,000 at the top may be a zero. So when additional funds come in and you have costs that are related to this, those additional funds can then be used towards GA costs. So I'd like to put that question just aside just for a second, because we'll come back to it once we start putting in expenses and showing you how to do the expenses.
Okay, thank you.
Sure. So let's move on. We're going to go on to section 2 now, which is the revolving loan funds. So the first question is, do you have an approved housing RLF? Yes or no? Everyone needs to answer this question because we need a yes or we need a no. And the second question, of course, is do you have an approved ED RLF? Again, we want a yes or a no on everyone. An approved means that the department has sent you a letter approving your RLF and that you have that letter on hand. If you don't have that letter on hand at this point and we have not approved your RLF, then all your money, you cannot put anything in this section, and all of your funds need to go up to the top under beginning balance of program income. Until you have an approved RLF, the money you have on hand is considered program income and must be used first. So If you mark yes to a housing RLF, you should have a letter indicating that your RLF has been approved. And let's just say that you have a housing, but you don't have an ED one. Let's go with that direction. Again, you may have program income on hand, 30,000, and you may have an approved housing RLF. The question now is, how much money do you have starting July the 1st that is related to your housing RLF? In this case, this jurisdiction has 30,000, of which 6,000 is GA. We're going to assume that they got an approved RLF because they actually had some housing rehab or housing loan money on hand, and we'll say that they have 100,000 of it on hand. So in theory, if they have 100,000 in an approved housing RLF and 30,000 up here, then from an accounting perspective, your jurisdiction has 130,000 in CDBG proceeds, program income RLF money. As a reminder, if you have an approved RLF for housing, and this 100,000 I suspect somebody, I think somebody's on hold. There we go. Let's see if that worked. Okay, so the 100,000 is now in here. You will notice that the jurisdiction July the 1st had 30,000 in program income, 100,000 in RLF, and they received 60,000. That 60,000 that was received cannot be proceeds from a housing loan, because the 60,000 is program income unrelated to the RLF. Therefore, any money that did come in as program income that is related to the housing RLF, needs to be placed in this section, payments received. So we'll say that they received 20,000 in a payment on a housing loan. We'll skip the interest, assuming that you would put that in there too. This means that the jurisdiction had 130 in program income with 100,000 set aside for an RLF. They received 80,000 in program income, of which 20,000 was from activities that are the same as the housing RLF. Now you can see from that you now have 120,000 available in your housing RLF and 90,000 available in PI.
I don't remember what it was.
The comment section, in this particular case, you will see that in the form we've placed comment sections in numerous different places because we want you to place your comments related to this particular subject in this comment box here. So if you've got a question, if you want to say something about your 35,000 rule, if you want to say something about your beginning balances, if you want to say something about the amounts of money, anything related to these numbers, you put your comment in here. Okay, we're going to, we have a few questions here, and then I'm going to try and open it up again and see if we can get some questions through the phone.
Okay, the question is, if you do not have an approved RLF for the first semi-annual report, but anticipated by the second, we indicate no in section 2 for the first semi-annual and yes in the semi-annual 2 and break the funds at that point?
Yes. You want to break the funds. So the question becomes, what do you do when you get an approved RLF and it's in the midstream? For our purposes, we would want you to go back to the beginning of the report period and separate out the 100 and the 30 as a new beginning balance. You would have to put comments in here. You would have to put your comments in here on the second semi-annual saying, we have an approved RLF as of, and we are now placing the beginning balance RLF at this amount. You would make those comments on the second semi-annual. On the first semi-annual, you don't have an RLF. So this would all be no, and these amounts wouldn't exist in here. So you would have no numbers in here. Then on the second semi-annual, and we're going to need to address this issue because I don't think the form's going to allow you to do this. On the second semi-annual, we're going to have to unblock these because based on that question, it makes sense that you need to be able to put in a beginning balance. So we'll unlock these two fields here, and you would put your comment down here. So the beginning balances of the semi-annuals will have to be put in even on the program income side. So you would, using semi-annual 1, you would take your ending balances and populate them into these beginning balances of program income versus beginning balances of RLF based on getting an approved RLF in the second semi-annual. And you would make your comments in this comment box. Okay. Any other questions on there? No. Okay, so let's go ahead and see if we can unmute and see how this works. Are there any questions from anyone regarding this portion? Okay, let's move on to the expenditure side. So what I'm going to do is I'm going to go ahead and put change this back because we're going to move into the expenditure side. Well, it doesn't matter the numbers, we'll just put some in. Okay, so we're now going to show you how the total expenditure of PIGA is represented up here and how it gets represented here, and then expenses related to your RLF also get to be populated into these numbers for you. First section is general admin. And now what we're asking you to do is to identify the amount of money you spent by type of expenses. So we're giving you 9 lines to put in what the money was spent on. So we have an idea, and that's a rolled up kind of line item detail that we need. So we'll put in here staffing costs. And then we're going to put in an amount. We'll put 6,000. So in semi-annual 1, June 30th to July 1 through December 31st, you've spent 6,000 in PI, GA that you have on hand. You will notice that 6,000 in your general admin, maximum amount available, has reduced your 16 down to 10. But you will also notice that it also has reduced the 90 down to 84. And again, this is because this amount in your PI includes your GA, because you cannot segregate it anymore. Okay, so you're going to do this in rolling up the amount of GA you spent during this period. Remember that GA can be spent on grant general admin and program income general admin. So you may have some expenses on your 14 contracts related to general admin, but because you have program income on hand, you're going to reimburse yourself for those costs with program income up to the maximum. If for some reason you have, let's put another cost in there, grant 2014 grant application, or we'll put CDBG. Whoa. Okay, and let's assume that it's a very expensive application. You'll notice that you've spent 15,000 there and 6,000, and you'll notice that up here it doesn't make any difference. It shows 21,000 and 69,000 is now available. But you will notice that this is turned red and you are in the negative. You cannot be in the negative on general admin. Whatever you've expended above the maximum available will need to be put back in to your PI, because this can only be a plus number or zero. You can never spend more than you have a maximum available in GA. So we'll take this number down, and now you can see between the two of them, you've spent 11,000, you have 5,000 left over. So these two numbers, this number and this number are the same, and you're minusing them twice. Okay, any questions on the GA?
Please write it up if you didn't tape it.
Was that a question? Sorry.
They have me on the phone, and I'm trying to block this so they don't hear everything. So write it down, Eve. Chris heard it. He can witness it for you.
Whoever needs a witness, I can hear that. You want to mute your phone. Are there any other questions?
Yes. Paula Mushrush is asking, you want GA very general. How do you access grant GA if you have more PI total on hand than you are spending? I mean, yeah, that's what she's asking.
So you can get to any funds in your contract if you've got any funds sitting in this amount, 79,000.
Right.
So in this section up at the top where it says ending PIGA balance available 79,000, you're not going to be able to get to your GA or any of your activity funds in your contract until that is zero. Now, I'm going to show you something now just because I want to show you the expenditures. If there's any other questions?
Seems like this one came backwards. I'll have to read it to understand what.
Okay, so let's go to the activity expenditures.
She's asking, so you use project for admin or general fund for admin?
So the general rule about CDBG whatever the expense is, whether it's general admin or whether it's your GA in your contract, whether it's program income or whether it's grant fund activities. The general rule is that you should use your local funds first to pay and then reimburse yourself either with grant funds or program income or RLF money as a secondary part. So the rule would be spend your local money, get reimbursed with program income if you have program income on hand, get reimbursed by your RLF money if you're doing an RLF activity, and then when you have no more program income on hand, you then go to your grant. Okay? So now what we're doing is saying all the money that you spent on activity costs, whether those activity is program income related to your RLF, or whether it's program income related to grants, or whether it's program income related to waivers, how much did you spend? And we want the details that go across this line. So the first question becomes, taking the general admin, which we put above, out of the equation, you're spending program income in one of four ways. You're going to spend it on ED RLF, you're going to spend it on housing RLF, you're going to spend it on a contract activity, or you're going to spend it on a waiver. The important thing about this form to remember is if you don't click on one of those four sections, one of these four choices here, it will not take the money that you spent and populate it above. So your math will always be off. So let's start with EDRLF. You've spent on an EDRLF, and we'll go down. So here are your activity choices, and we'll go down to the correct direct financial assistance. Now I've clicked on the activity. We'll give it a business name. Ace Hardware, there we go, Ace. And we'll have address, we'll just put an address, Main Street. You're able to put as much of the address as you can in there. You can also just put the physical address and the zip code because we obviously know the city and the state. Now, this is fairly similar to our normal reporting on expenditures. So we want to know how much you spent on this activity during this period. And we'll say that you spent $30,000 in activity. And we'll say that you spent $2,000 in activity delivery. We'll say that this is the first time this project came to us. So in other words, this project has not been in the report before, so therefore you didn't spend any money on this project prior. That means over the period of this project has spent $32,000 in federal funds at the ACE project. And then the last question becomes, is the project complete? And we're going to assume that it is not complete, right? Now, this information says that these two numbers together have to go up to show that they were expended during the period so that the math could work. And you'll notice that there's a problem with this because you spent $32,000 on an economic development RLF and you don't have any RLF approved. So you now have a negative number of 32 because you have no. So be certain that you know when you click on here and you describe the project that you actually have the approval to do that project, and it does exist. So we'll change this to a housing project. And now you'll notice up in the housing section that we have the 32 expended, and that you now have a new ending balance. You'll notice that that 32,000 didn't go up here anywhere. So you can see that the 32,000 is here, and that it's properly taken out. Now, let's go down here and let's do another. Let's say we have a contract. We have a contract activity. You're spending your program income on your contract activity, and it is a senior center. The owner project name would be the name of the project, which is the senior center. So what is the name of the senior center? And that would go in here. You would put in the address again. And you're again going to say how much did you spend this period. So let's say we've got a senior center, so it's either an acquisition rehab, or new construction. Let's say that you spent $60,000 this period, and of that, $3,000 was GA. Let's say in the prior period, well, let's leave it like that for now, and let's also say that this project is not complete. So if you notice that that 60,000 along with the GA, along with the GA, the 60 plus the AD plus GA here becomes this number. So this is activities, that is program income spent, and the GA. Both of those numbers are in this 74,000. You now have 16,000 left. Now, if I change that to 10, you'll notice, oh, you still have some. Sorry, didn't do that right. Let me add another. Let's make this 80,000. You'll notice that you don't have that amount available, and again, this number becomes negative, which it can't be.
I have a few questions. They're not necessarily sequential, but so if your GA costs exceed the amount that you have available under GA, you cannot access your grant funds to recover the amount you overspent.
You won't be able to. So the question is, can you get that GA cost that is above what you have in program income on hand from your contract? And the answer is yes, you can, if you have zero program income at the top here. So if all your program income is spent, then you can access your grant funds, including your general admin. But if you've spent all your GA and have additional costs that you want to get from your contract, but you still have program income on hand, you would not be able to get that GA until you spent all of your program income, and you can then get your GA through your costs that you have in the grant.
Okay. The second is assume a complete RLF is a closed out loan, but you could clarify if this would constitute a complete project.
Okay, so with this form and with program income, you are reporting expenditures by project. So let's say in this particular case, we have a housing RLF for Mr. Ace at Main Street, in which you've spent $32,000. You are going to, for every address, do a line. So you are going to, if you're doing two projects, you're going to put a second project on the line. And you're going to have that project, which is going to be a housing and it's going to be the name of the family, which is Smith, and it's now First Street, full address please, I'm just doing this simple, and now you've got $50,000 being spent, in this case, $10,000 in GA, well that might be a little bit too much, let's just do $8,000 in GA, or $8, no, let's do $8,000, not $8. How's it, can you do it in $8?
Nope.
And then in this case, you started the project and ended it in this report period, so you then put yes. As soon as you put yes, the goal in the future is once you put yes, you are to submit the completion report for that project, which is what it says up here. Now, we're still working on the setup and completion reports. So our expectation is we'll be able to complete them and we'll come back to you and say, give us the completion reports for these projects that you have finished as soon as we're done. But that's the idea. Once you put yes here, your project's complete, we need the beneficiary and accomplishment data by these addresses.
Oh, that's the trigger. Here's another question.
Now, Thomas, this is Terry. Can I ask a question?
Certainly.
Okay. I'm not confused, but I'm a little, I don't know, maybe I am confused. On the program income GA, you're saying that we cannot draw down grant funds until all the program income is expended. And I think I've asked this question before, and it's really never been clarified. As you're aware, we all receive funds on a monthly basis. So program income is reported semi-annually. I draw down quarterly from my grants. So we always have program income. We have, and I'm thinking as I'm speaking, I'm sorry. We have program income coming in all the time, so we're never going to be at a zero. However, the admin funds are zeroed out. I'm always going to have program income. I have staff working on grant projects or programs. Am I ever going to be able to spend my admin funds on the contract?
Well, that's going to be dependent on whether you have, as a city, the capacity to spend your program income and to expend your grant funds so that you have all of them spent. Because if you always have program income on hand, meaning you're spending money on let's say a grant activity, and you're having to use your program income because that's what you have on hand, then you're in a dilemma where if you always have program income that's spending on your grant funds, and you're let's say doing a housing rehab program, and every time your housing rehab program needs to be, the project needs to be paid, you have enough program income on hand?
Well, not enough, but I'm always going to have some, but my general admin is going to be spent down. So I guess what I'm saying is, and maybe I don't think that I'm the exception to the rule, but I'm sure that a lot of cities, because they don't have the redevelopment agency, we count on that general admin to pay staff for projects and programs. And if PI is being spent down and we still have program or project money in PI and we can't draw down contract money, but we're trying to do PI program, PI projects, and spend down contract money, at what point?
So, Terry, just as this might be helpful. Again, I would really recommend that you read the management memo. And I think we can go offline because we've actually had these conversations in webinars and roundtables about how to spend program income and how to strategize around this separately. And today we really just want to discuss the form and how those rules and this form work together.
Okay.
All right? So maybe call Kevin and we'll set up a conference call and walk you through after you've read the management memo.
I did read it, but it just doesn't, it's just not clicking for me.
Okay, well then we can walk you through it. It's not a problem.
Okay.
I just, for this purposes, I don't want it to be, I don't want to have this conversation around the rules when really what we're doing here is trying to help jurisdictions get the form and how to use it.
Okay.
Well,
Sorry.
let me also say something just that might help this question a little bit. So you'll notice that in this particular case, we have a housing rehab. The family's name is Smith. They're up First Street. We've spent $58,000 and the project's complete. However, in this particular case, this is $58,000 in program income. The project may have actually cost $100,000. And the rest of the funds that were spent on this project were actually spent with contract funds. Because you have an RLF for housing, but you also have a housing rehab in your contract. And so it's not unusual for you to take a housing rehab or an ED project and say, I'm drawing down all of my housing RLF money. The project cost $100,000. I've got $58,000 on hand. I'm going to spend my $58,000 and the rest of it's going to come out of the grant funds because right now I have no other money on hand. This is the same with this contract activity. You'll notice we did a senior center and we spent $60,000 and the project's not complete. This is $60,000 in program income. Because this is a contract, you probably may have spent all your program income and you've actually spent $200,000 on this project, but the other money is actually grant money. You're only reporting the expenditure of the senior center of what you spent in that senior center in program income, not the grant funds. So you're going to see a lot of projects, I would suspect, in the future that are going to be split funded between program income and grant funds. Only the program income goes on here. Now, the other thing I want to show you is, if you notice up here, you've got right now $81,000 that's been expended in both GA and grant funds. I'm going to spend $50,000 in a prior period and $5,000 in activity delivery in a prior period. So in theory, this project has spent $125,000 in program income, of which $55,000 was prior to June 30th, 2014. So in other words, you're going to keep this project on here until the project is actually complete, and you put yes. Once you put yes here in both of these places, then in the next semi-annual, they don't go on here. And you will notice that in this particular case, the one project that is not complete, this housing on Main Street, ACE, because it's not complete, it's populated the field and left on there, with the prior money spent being this $32,000 here, is now moved over to previous. And it's going to stay on here until you mark yes, if it's in the first semi-annual. Once it's a yes, then this project goes away and we don't want you to report it. If you're in second semi-annual and you put a yes here, then in the next, starting the next fiscal year, you should not put this project on there because it is complete. And just so we're clear on complete, Complete means that you have expended all of the project funds, that the project that you started is finished, it's occupied if it's a house. If you're building a senior center, then the senior center is up and running. If you're spending the money on an economic development project, it means your jobs have been created and all of the funds have been dispersed. Once you get to that, then you put a yes. Because once it gets to yes, you are telling us that you can give us the accomplishments for that CDBG eligible activity. We have a few questions. We're going to go to the questions.
Montague has a question.
Okay, Montague.
An example, housing rehab, not an RLF, but a housing rehab.
Yes.
The project's $100,000. We have $50,000 left in PI, which includes your GA, and you're only reporting what we spent out of PI. So we've spent $40,000 on the rehab and say 10 on the GA, and that leaves us with 0 PI total. And we're not reporting grant funds. So now we make a grant request to get the other $50,000 to complete the project. But since you're not reporting the grant expenditures on here, how are you going to ever get to a yes that the project's complete with the PI money?
So regardless of the amount you spend in PI, the question is the project complete? Is a question related to the project. So if you spent $50,000 in PI on a housing rehab, and you spent $100,000, or you haven't spent the other money in the grant funds yet, then the project still isn't complete. So you would leave it. So you would leave it on here until you've drawn down all of the grant funds as well.
So we would do a grant fund request. You would send us the money. We would put it into the PI, and then we would expend it through here and show it that it's complete.
No. So let's imagine that you have a project, and let's make it simple, because housing rehab is multiple funds requests. It's multiple because you're taking time and you're getting different invoices. Let's just assume it's one invoice, right?
Okay.
So you've got one invoice. It's sitting in front of you, and it's an invoice for $100,000, right? Covering everything.
Right.
You've got $50,000 on hand in program income. So $50,000 of that invoice has now been paid, and you're going to report it on here. You're going to then go to us and say, please give me $50,000. I've spent $50,000 in PI. I've got $100,000 that needs to be paid. Therefore, you need to pay me the $50,000 that I don't have. We then give you that $50,000 and you pay the bill, or you pay the bill and then you give us the $50,000, we pay you the $50,000, and you reimburse yourself.
Okay.
Am I making sense? Until you do all of that, the project's not complete.
Okay, so then you give us the $50,000 in the grant money, and then the next report we don't show anything else was expended, but we just change it to yes, it's complete.
That's correct. Yes. So I get what you're saying. So theoretically, you could have an address. If you notice here, ACE is still on here because it was a no, right? You could just simply put zeros in here and then change it to a yes. This is not unusual. So, for example, let me give you an example where this does happen. Let's imagine that you're doing infrastructure in support of new housing. You're going to be spending this money, and you're going to say, I need no more money from grant or PI because the project's finished, but the project's not complete until the units are built. There's no national objective until the units are built. And occupied, thank you. This is so you could theoretically have this as zeros for some time, simply because you're waiting to meet the national objective. You're waiting for the second part of it to be done. If you put yes, you can't complete, for example, on an infrastructure in support of, You could put yes there, but you could never do a completion report because you have no demographics on the households that are in those units because the units haven't been built. So it is possible to have a project sitting in this columns with zeros for some time before you can get to yes. Does that answer?
Well, I suppose. We'll come back to it later.
Okay.
Thank you.
No problem.
Thomas, this is Louise. I have a question.
Yes, Louise.
Okay, so let's say I've submitted my end of the year report, my PI report, my December PI report, and then come the end of March, I'm doing a quarterly draw for my open grant. At the end of December, I showed I had program income, but now I've spent it, and now I'm going to draw some grant funds, but I haven't reported that I've spent it because I don't do another program income report until the following June. Is that going to be a problem?
No, it won't be. So the answer to your question is we look at the program income report just from a standpoint of saying, well, there's two answers to this question, Louise. The first one is present. So presently, we don't have completion reports and setup reports, and we don't have a revised draw request. The revised draw request will do the exact same thing that the home program does, which is to ask you how much program income do you have on hand.
Oh, okay.
Right? We'll get to that in that way. In the interim, your rep will see a funds request. It'll come in, and they'll remember that they saw the last PI report 3 months ago that said you have $1.5 million on hand. They may call you up and say, or send you an email and say, you have no program income on hand? So we'll use the report, and we'll be sending emails to confirm you saying, I have no program income on hand.
Okay.
Until we get to the funds request. So this is really a place, this report is really about rolling up what you did during the 6 months.
Okay.
It's not a real-time reporting. When you submit a funds request, we will find a place in the funds request to ask you, do you have PI? That question will be asked in a way so that it's a reasonable question, meaning you should be able to answer that question in which no further back than 30 days, you say 30 days ago when I last talked to my accounting, there was 0 program income on hand. That's acceptable. We don't expect you to go before you submit a funds request and say, did any program income come in today? It's reasonable time. And the home program uses a 30-day time frame. And we would use the same time frame.
Okay, that's fine. That answers my question.
Okay. There are a few questions that came in on the chat.
Placer County has an open grant that has administration, activity delivery, and activity expenses. We had a PI starting balance of 0 in general administration. We have spent all of the PI we had on paying the grant expenses, activity admin, activity delivery. How do I utilize the administration funds in the grant to pay the admin? My draw request shows in the PI expended section in the general admin expenses.
So if in this section right here today, you have 0, no PI on hand, and let's assume that your maximum available GA is also 0, but you have 50,000 in your grants. So you have 50,000. If you have no program income on hand and you have costs associated with GA, CDBG GA, then you can submit a draw request for that GA. In other words, the way we see general admin is the cost of managing your CDBG activities, not an individual activity, but your activities. your overall administration of CDBG. If you have an overall administrative cost for running your CDBG program, i.e. sitting in on this call, then you can draw that cost, you can get reimbursed from that cost from either grant funds or program income. We do not say that your costs have to be associated with PI or your costs have to be associated with your grant. They just have to be CDBG related. So whichever fund is available, you can get to it. Now, I want to do one other thing as well, and that is change one of these numbers to this. So I've now made this project here as a housing, it's an RLF again, 17,000. Oops, no, I don't want to do that one. I want to do this one. We'll make that 18. So I've changed this senior center, I've spent $18 more, 18,000 here, and oh, there's 1,000 left, sorry. Let me change this one more time. So now you will see that I've spent all my program income on hand. At the end of this December the 31st, I have no PI left. But I have 5,200 in GA available. But you will notice it's available, but you can't get to it because you have no money here. If in the next semi-annual, you'll notice you have the 5,000 sitting there. If 30,000 comes in, you not only have the 5,000 additional GA, but there's now 30,000 in program income available, of which you have 10,000 you can spend on eligible GA costs. So even though you have a maximum available here of 5,000, you have no source to spend it until more money comes in. So just beware of that particular issue, because this can happen. This has been set up as an accounting method to show you what your maximum available GA is, not how much you can spend. If you don't have PI on hand because you've used it on grant funds, then you won't be able to get to this period. You might be able to get to it next period.
Here's another question. I responded to it privately, but you might want to go into it. How do you account for RLF GA?
There is no RLF GA. So there's no need to account for it. You are not able, if you have an RLF, to have GA coming in from the amount received. So in this case, you'll see that 200,000 came in housing loan repayments. That resulted in 200,000 being deposited, plus the 6,000, that was the beginning balance, minus what was spent, you have 107,000 left. There is no GA in these numbers because you cannot collect GA from this 200,000. You can only collect it from the 60 up here. This is the decision that jurisdictions have to make on whether they want a housing RLF.
And Thomas, even though there's $107,000 in RLF funds still sitting there, if they have GA costs, they cannot use those on GA expenses. I think you need to reiterate.
So the statement in the back of me is, if you have this 107,000, this 107,000, as we say in the management memo, the 200 has to come in for activities that are housing related and can only be spent on housing related activities, as the memo states. So if you spend $1,000 of this money related to GA costs that are not directly related to housing RLF activity, then that 1,000 has to be put back into your RLF. The only money that you can spend in a housing RLF is your activity delivery. So in this particular case, if we look at the housing RLF here, you have $30,000 that was spent in the activity. When we say activity in a housing or an economic development loan of some sort, or a housing loan of some sort, the amount sitting in the activity is the amount of the loan. That is the loan amount, or in some cases, if it's, well, it can't be in this particular case. This is, in RLF, it has to be a loan. So this is the loan amount, the amount that is actually loaned to the business, to the house, to the family that wants to buy a house. The $2,000 is the cost associated with doing housing RLF activity. So it's the activity delivery associated with the activity. In some cases, this is, for example, the inspection of the house. This is the re-inspection of the house. This is helping the family. This is income qualifying families. This is helping the family choose a contractor. This is closing out the contract. This is making sure all the permits were done. This is making sure the family's happy with the work that's being done. This is managing your waiting list to make sure who goes first, who goes second. It's all of the costs associated with your RLF activity in this case. Now, if for some reason, this is, as you can see, this is a housing rehab activity, but that housing rehab activity could actually be done as a contract. It could also be done as a waiver, because we've approved you as a waiver to do this activity. Let's leave it as a waiver. It's a housing, and it's this. Obviously, because it's a waiver, this is going to end up being 100% PI. This answer to these two has not changed. It is still, this is the loan, this is the activity delivery to make the loan. These numbers don't change based on this. All that I did when I changed this from an RLF is I changed that it didn't come out of this expense. It went up here, which you don't have the money for. Once I put this back into the RLF, then you can see it was taken out of here, not taken out of here. This is back to zero. So you can see that these fields are actually critical to the math up above.
And in addition to the management memo, if you have an RLF, you've also signed the PI reuse agreement that is pretty clear on the rules associated with a RLF and not having GA associated with it.
So the GA side of this is problematic for people that have an RLF or choose to go with the RLF. The value, of course, of the RLF is that once you put the money in this RLF and you don't have any expenses that's GA related, and you change all of these to RLF activities, then once you have this in here, all of your grant activities, because this is zero and you don't have any program income, it's all in your RLF, then you'll be able to take your grant activities, as long as they're not the same activity, and draw down from them. Your RLF is your only way of setting aside funds for the purposes of being able to get to your grant funds. Other than that, there's no value to doing, there's no value from a general admin perspective in doing it the other way. Let's put in some numbers here just to do it. Okay, are there any other questions?
Yes.
Okay.
This is Terry Cox. I've got a couple.
Okay, Terry.
Okay, so on the expenditures, if you have supplemental projects, they're going to be listed as waivers?
No, they're going to be listed as contracts.
Okay, so even if they were once waivers and they are now part of a new contract, they will still be listed as contracts.
Yes, they need to be listed as contracts because that tells the fiscal staff to look for this activity in the contract.
Okay, great. Then for a public service, for the owner project name column and the project address column, what do we put?
For owner, you're going to put the name of the nonprofit.
Okay.
And the address of that nonprofit.
Okay, great. Okay, that was it. Thanks.
Okay.
Okay. If a project associated with a contract exceeds the program income available on hand, based on your last instruction, I assume you would list only the amount funded through program income, even though the project may have cost more during that one expenditure. Please confirm.
I'm not getting the question.
This is David White at the City of Arcata. I think I posted that question a while back when you were discussing how to report on a expenditure that had both PI and grant
yes.
Sources, and you answered the question. My question really was related to how to report if your expenditure was over and above what you had in PI. So you addressed it. Thank you much.
Yeah, and just for clarity, the place where you're really going to report in the long term, the place where you're really going to report on how much money was spent on this project is really going to be in your setup and your completion report. And your funds request, when it comes in, will have a way for you to say, I've spent this much in program income and I need this much in grant funds. So there'll be multiple places where the two of them join together. For the PI report, we're just wanting what you spent in PI. We'll be able to connect them based on the fact that we know that it's a contract.
Okay. It often takes, this is two questions, it often takes several months to close a FTHB and AD accrues. If we report and then they fail, can we make a negative adjustment and add back to GA?
What's the activities again?
First-time home buyer.
Okay. So you don't have a first-time home buyer and you don't have eligible costs for reimbursement until the project is complete. They bought a house and escrow has closed. There is no reimbursement until escrow closes. So you should not really be reporting or spending CDBG funds on something that's not complete. Because it is a repayment if it doesn't get complete.
No national objective.
There's no national objective.
Here's question 2 from Paula. What about microenterprise, TA, or public service that has no address?
I'm not sure why there wouldn't be an address. So the owner project name is going to be, if you're doing microenterprise TA and you're doing it at the county level, then it's the county is the address and the county's the operator. If you've hired an operator, I'm going to assume that operator has a name, and I'm going to assume that there is an address of some sort. Whatever that address is, it should be in there. Now, if it's a public service, obviously, if it's a nonprofit doing a particular service, then that should be easy to do because the address is there. I'm not certain if you're using, I'm not certain how you would do TA and not have an entity that you could put in there and an address. I think you would find one.
That word, red flag.
It's raining in the background in case you guys can hear this. Yes.
Here's a question. In the expenditure section, you don't need to know which contract number and activity is attached to?
No. First of all, the word attached needs to be careful because there is no PI attached to any contract. And you don't need to know because as of now with the super contracts, with all the activities in one, there are very few multiple contracts, and we can look at that activity and determine which contract it's in. So you do not need to know the contract number. It's not a big deal. We can easily find out. At the most, you could have a jurisdiction that has 2 open contracts, one almost finished and one just starting kind of thing. That's 2 contracts to look in for a senior center. We would be able to do that.
Next question.
If we put the contract number in there, we were just making you put numbers in that we knew we could do ourselves. Would that be set up? Yeah. So if the activity is being approved, it would be approved in a particular contract, and your setup report and your completion report would ask for it there. In here, we wouldn't need it. Other questions?
Mm-hmm. For an EDRLF that had met the national objective public benefit and the funds are dispersed, would based on what you said be complete. However, if there is a need to do a workout at a future date to keep the loan viable so that the borrower will repay, where would you charge the costs associated with this workout since the project would not be on the list?
You charge it to your general fund. So there is no cost associated with workout that's eligible under CDBG. You could not use it in anywhere that would work. The problem is that it would be considered loan servicing and therefore general admin. And the problem with general admin is you may not have any. The other problem is you might be able to consider it, we might be able to consider it activity delivery, but the problem with activity delivery is you may not have made a loan. And you cannot use activity delivery if you're not meeting a national objective. So, are they talking about loan? Yeah. Okay, so, did that?
Yeah, but there are more questions.
Okay, there are more questions. We're going to go ahead and read them.
What if you change over to RLF and had a GA balance from where you did not have an RLF? What happens to that GA?
That GA so we will allow the GA to carry over until your maximum is done. So you'll be able to carry it over because there's a balance, but you'll never be able to put any more money in it because you're putting nothing in this received section. So it'll eventually go away.
Then can we report the housing RLF? Let's see, this is a different person. Then can we report the housing RLF when it is not completed? And if we are doing that, then we are drawing a partial payment on the loan that still has not closed escrow. Is this acceptable?
Yeah, so I think this question is directly related to the earlier question about first-time home buyer, or what we call home buyer assistance. Under the CDBG program, the home buyer assistance, the activity, you don't have multiple payments because you don't have a payment until escrow closes. We have no reimbursement, we have no activity until it's closed. If you're doing a housing rehab, then you're going to have multiple expenses. And the truth is you have an expense in which work has been complete and you have an invoice that can be reimbursed. With home buyer assistance, you may have an invoice, but you don't have a completed work until it closes escrow. But if you've got a housing rehab activity in which a roof has been put on and you have an invoice to pay for that roof, and you pay for that roof, then you have a reimbursement cost, and we can pay that cost. So in rehab and other projects, you may have multiples. In some cases, you may have one. Another example of this is we may have an activity in which you're acquiring land for the purposes of building multifamily housing on it. You're going to buy the land, and that's an eligible expense once you close escrow. But you still don't have a national objective until the houses are built. So there are two things that are in play here that question comes up. The first question is, can you get reimbursed? And the answer is, if the work's complete and you have an invoice that you paid, then you can get reimbursed. For the project to be complete, you have to do all of the steps to meet the national objective and have accomplishments. And those two don't necessarily go together. Sometimes they're the same time and sometimes they're later, depending on the activity.
Okay, next. If we have funds in total maximum GA available but a zero cash balance, can GA expenses be paid by the jurisdiction and reimbursed later when PI is received?
Yes. The main thing to remember is in this particular case, if we look at the top, you have no PI on hand. You have $3,000 available in expenses that you could pay, but you don't have the money to pay it. So you cannot put that $3,000 worth of expenses in here because you don't have the money. This field will go red. So the main thing to remember is if we're a reimbursement program, then it's when you ask for reimbursement is do you have the money for reimbursement. So it's perfectly fine to do it that way. The main issue that you might have is your accounting and auditors may not like you to spend money in 2013-14 and not actually be able to register it and get repaid until 14-15. That's your internal process that you have to work out. For our purposes, it's not relevant. It's you wanted reimbursement on this date. We reimbursed you on this date. Did those costs come in, and do you have the expenses? It doesn't matter how far past that was. Okay? Okay. Now, no other questions. Are there any questions online, direct through the phone? Nope.
Unmute. I muted them all.
I'm going to unmute. Are there any questions that anybody has? Okay. So I'm going to go ahead and move down the form. So we've left hang on just a second. Okay, so we've given you a lot of lines because you could theoretically have a lot of projects. If you're doing microenterprise, let's say you're doing microenterprise financial assistance, you're doing business assistance, you're doing housing, rehab, and you have multiple projects in your contract, and you have a waiver, let's say. All of those, and you have to keep them up. You have to keep these lines open until you change this to a yes. You could theoretically need a lot of lines. So we've placed a lot of lines in here purposely to allow you to get all of your activity per project on here. So the other thing that makes this fundamentally different than the past is we are asking for, even though we're asking for, let's say, a contract, and we're asking you to put in your information related to housing rehab, this information and what you're putting in these columns is by address. It is an address-based reporting now. In the past, you were reporting housing rehab and how much you spent on that whole activity, which could have been one project or 6 projects. If it's 6 projects, instead of reporting it on one line, you're reporting all 6 on 6 separate lines. So this is a big change in the way we do our reporting. In the past, if you did microenterprise financial assistance, you might have assisted in that semi-annual period 6 projects, 6 individual businesses. And in the past, you had that all on one line. Those 6 individual businesses need their own line now. Each line is a project. And that's a new way of reporting. So I just want to clarify that you notice that distinction. And it is the direction we're going with our setup and completion reports as well. We've made a few minor changes to this part of the form. I want to show you something real quick. Let's put in a date. So I put in the date here, or the date of the report. That date is now populated down here, so you don't have to put it in. If for some reason you start the report up at the top and you want the date to be different because you send it later, then you need to go to the top of the report and change the date to the date you want. This field is new. The question here is, who is the authorized representative? So I want to back up just a second. These reports used to be required to come in quarterly, and they needed a wet signature from the authorized representative. When we changed to this Excel sheet, we said, we're going to accept this electronically, but we need you to include the authorized representative when you send it physically in the email. And we found that not all of you have actually done that. And we're not certain sometimes when the email comes in whether the person it's being sent to is actually the authorized representative, because we can't really tell from the email. So we just need you to note who is the authorized representative, and you're going to put their name in this field. Then we want to know who is the preparer and the usual information, what's their phone number, what's their email. Another change is you will notice here that there is a new email address. As of now, we have a cdbg.reports email. So we still have our CDBG email box, but we're going to keep that one for just general CDBG questions, requests, or comments. In the future, anything that's related to a report will be coming in. We would want it to come in on the CDBG reports email. So just be aware of that change. So we have 2 email addresses, a regular CDBG one for general questions, and then a CDBG reports. And this would be reports like the PI report. It would also be your Davis-Bacon semi-annual report. Anything related to that would go into this location. The MeBWeB reports when they come, Section 3 reports, all of those we want to come in electronically. They come in on this email address in the future. And we're doing that mainly because we're finding that the CDBG inbox is getting too big and too unruly with all of the different types, so we're splitting it up into 2. Okay, now for semi-annual 2, we're going to need to obviously open up these beginning balances because that doesn't really work very well to leave them closed, including the GA one. Semi-annual 2 is basically the same as what you did for semi-annual 1. It is just going to be a continuation of what you did in the second period. I don't think there's anything on this that we need to necessarily go over. If there are any other questions, if there are any questions about semi-annual 2, the second part, please let me know. Yeah.
Here's one question.
All right, we do have a question. We are unmuting in case somebody else has any questions.
Oh, am I unmuted now?
You are unmuted now.
Oh, yay. And I apologize, I joined late. We've had some weather issues here.
Have you?
Yeah, it's raining. It's raining a lot.
We just started here too.
Oh, good, because I was afraid I missed all of the questions I have. I'm going to be redundant.
If I'm lucky, the rain will get really bad and none of my staff will be able to go home and we'll work extra late.
Okay. Okay, this is on the form itself, okay? On the form itself where it says payments received and interest earned. I'm guessing that the interest earned is bank interest, not the interest on loans.
Correct.
Oh, good. Okay. Now,
payments received is principal and interest.
P&I and payment. Okay.
Yeah, so just for clarity, just if I could do this, theoretically, all of your program income going forward, obviously you could have up to 3 separate accounts: program income, housing RLF, and EDRLF. All of these monies need to be in a interest-bearing account.
Mm-hmm. Okay,
so
we've chosen to
have interest earned on all of them.
Okay, we have an RLF.
Okay, congratulations.
Okay. Well, thank you. Does that mean we don't have program income? I think it does, but I want you to tell me.
So the answer to that question is, let's assume that you have a housing RLF.
That's what we have.
Ha-ha. So you have a housing RLF, and you have $10 that just came in.
Mm-hmm.
What did that $10 come from? Did it
housing.
come from an economic development loan?
No.
Then it's not housing RLF. Did it come from payments received because your public service that you bought a van for has sold the van and they're now giving you the money back for the sale of the van?
No.
If that was yes, then that's program income.
Oh, I see.
It's not RLF. So RLF is the funds that come in for the same activity that RLF is for.
Okay.
So it could theoretically be zero, but it's not necessarily forever zero.
Okay.
You have to be, and this is why we said in our trainings and in our discussions about this, once you create an RLF, you really need to go into your portfolio and identify all of the loans that are directly related to that RLF. And then any other funds that come in that's not related to that RLF, you have to put in program income.
Okay, I believe that we don't have the capacity to collect anything but housing because they're all housing loans.
Okay.
So,
and that may be true. I wanted to try and answer that question larger. Well, I never say never, but I don't think we can do that. But on when we make a loan, though, we would be reporting the total loan on a sheet on page 2? No, you're not going to report the total loan. You're going to report the amount spent.
Okay, to make...
So that can be the same. So, for example, if you're doing a microenterprise loan, and that microenterprise loan is to buy a piece of equipment.
Say that again. It's kind of crashing here.
Yeah. Let's say you put... So, in some cases, it could be the same as the loan amount. The question becomes, are you making multiple payments? So if you were doing a one payment like on our home buyer assistance where they're buying a house and it's one payment, then it would mean that it would be the same. But what you're putting in there is not the loan amount, you're putting the amount you spent on that loan during this period.
Okay, so do those things go on to page 2? Do you make a list of what you've spent, the loan
You make it based on, if you notice on the column over here, it says type of expenditures. You click that on and say, this is a housing RLF. You then say, I'm doing housing rehab, let's say, right? Whoops.
Okay, are you talking about section 2?
Do you have it visually in front of you?
I have it visually in front of me.
Okay, you see how I'm doing this? Can you see me doing this?
I'm looking at my form, not you. Okay, go ahead.
Yeah.
Okay.
So if you look at me, there's your housing RLF.
Okay, okay.
There's the activity.
Okay.
Now it's by address.
Oh, okay.
So theoretically, you could be putting 4 or 5 projects on here because every address that you're assisting, you're going to put the name of the owner and their address.
Okay.
And how much during this period you spent on that address.
Okay.
And you may actually have multiple addresses and projects.
Okay.
That's ready to go to him, and I'll have Owen just because I just got the new GL from Sherry.
Okay. Now, when we get over there to the next column after the address,
yes,
it says total PI. It's not PI then, is it?
Well, yeah, it is. When we say PI, we mean PI and RLF.
Oh, good. Okay. I thought I was got the wrong. Yeah. Okay.
The thing to remember is the way the feds describe this is in regulation is it is all PI. The difference is we're setting aside a certain amount of that PI for the same activity and calling it an RLF.
Okay. Perfect. Thank you. Then when the things that you have spent money on are an amount,
yes,
and the project is completed,
yes,
or maybe as the project is done in sections, you put that number on the total expenses on section
yes, so
2.
the first two sections is the amount of PI and the amount of activity you spent this period. The second two columns is how much you spent on that same address in the prior, which could be zeros.
Okay.
Right?
Right.
And then the final question is it finished?
Okay.
That address. And that could be a yes or a no. If it's housing rehab, it's going to be a yes if you have finished all the construction and you have a project that is with a completion. And you've, in essence, taken that completion and given it to the county or whoever it is to say the project's finished and you have a notice of completion.
Okay. Now,
then
this
you're
is
going to put yes.
This is kind of just a theoretical question, but because these are funds that we have, I mean, in other words, there is a bank already to do the project, would it be easier on everybody if we report the project when it is completed and we get a yes there? Because then at that time we might want to get our expenses, but we really already have the money.
Right. So the answer to that is no. And the reason I say no is because if for some reason you're trying to get to your grant funds and you say you've not spent any, the other thing is remember this is an accounting. So up here, you're saying you spent money this period. If you don't put it in here, then it won't show up on here.
I see. Okay.
Your ending balance will be wrong. Therefore, your beginning balance will be wrong.
Okay. Thank you very much. That's really important. Thank you.
Yeah. Other questions? Okay, we have a few on the chat, so we're going to read.
Please define interest earned. Is this just bank interest or is it interest received?
So I think we've already answered this, but I'll say it again. The amount of received PI or RLF money is the loan, is the principal and the interest payment. Interest earned is bank interest. So if you read if you put your cursor above this, you'll see it says RLF account should be in an interest-bearing bank account, therefore its interest should be earned. So it's interest earned on a bank account.
Okay, next question. The participant says, it was my interpretation that the RLF, no matter if it was ED or housing, that if we made a loan in either an ED or housing program through a grant, the funds repaid going into the RLF was still program income, and as an RLF were considered separate accounts of PI and thus used for that specific program, ED or housing.
This is what I'm hearing is a bit of a complicated question, and it kind of goes to the past. So if you have, let's say you've created an ED RLF, and in addition to that, you have a 14 contract that has ED activities. And that 14 contract has $500,000 in ED activities for you. That is not program income. That is grant funds. It is not program income, and it is not part of your RLF. You only have RLF money when the grant funds go into a loan and then come back as payments. So you do not have $500,000 in your RLF when we award you $500,000 in ED. You have a certain amount of money in your RLF and a certain amount of money in grant funds sitting in economic development. You cannot get to that $500,000 in your grant funds until you've finished and spent until you zero out your ED RLF money. Yes, RLF can only be considered PI, meaning it has come in from an ED activity that was in the past by either ED PI or grant funds. Grant funds are not program income. Okay?
That's it.
Okay.
That's it.
We're going to leave it open just for a few more minutes because at this point I don't have anything. Oh, well, I will show you there is an annual section on here. Just so you know, this annual section is nothing for you to fill out. These are rolled up numbers that we're collecting for our own data. And there's nothing on this annual side, unlike before. There's nothing in this annual tab that you have to fill out. Are there any other questions? Otherwise, we're going to go ahead and stop. As a reminder, we do have a second webinar coming up January the 8th. The reason why we're doing one January the 8th is we're assuming that between now and January the 8th, you're probably going to start filling out this form. And as you fill out this form, you may have some questions. So the second webinar will be more of a questions and answers webinar, where we're assuming there are some questions and some answers that we need to make because you're actually physically putting in numbers from your accounting. So it might make sense for you to actually be in both of these webinars. For that reason. And I would recommend that for the next webinar, again, January the 8th, for that webinar that you register and that you also actually test this report with your information. And if there are no other questions, we do have another question.
The person that was asking about the definition of interest earned, she's saying that there was background noise. So did you say that RLF revenue received from loan payments be included as PI revenue?
So if you have an approved RLF and you have funds that came in from the same activity, we'll say housing RLF, and you have a housing rehab loan that's being repaid, that's repaying the interest as well as the principal, that full amount will go into the semi-annual, we'll put it in one, semi-annual one. The full amount will go into payments received. If you're sitting on $6,000 here, that $6,000 that was in the beginning has been sitting in the bank. And theoretically, it's earning bank interest. This $107,000 that's left over, that's an ending balance, is also sitting in an account that's interest-bearing, and you should have interest. So the question is, the amount that goes in here is what interest you earned on the money sitting in the bank. If you have, and we do have jurisdictions that do this, which is perfectly okay, if you're sitting all of your money in one interest-bearing account, then you have to proportionally do the interest on that interest-bearing account based on the amount of money in each of those activities or each of the programs. But it needs to be in an interest-bearing account, and you should have interest in there one would expect some number in there. If you have a beginning balance, you should have earned interest.
So
I think that should answer the question.
So we have another clarifying question. You've answered this, but just for clarity.
Okay.
If we have an RLF account, ED and or housing is PI for loans repaid.
Sorry, could you read that again?
If we have an RLF account, ED and or housing is PI for loans repaid.
I'm not sure I understand that question.
This goes back to the interpretation of the RLF, no matter if it was your house. That question, the long question you answered just moments ago.
Go back into the RLF. So if you have, the rule is, and I think that's the, I'm not certain I'm understanding the question, but let's answer it in that way. If you have an approved housing RLF, then in that housing RLF, you have potentially 3 different activities, separate CDBG eligible activities that you can do, and that you must put your proceeds into there if they are the same activity. So if you have a housing RLF, you have housing rehab, single family, owner occupied, you have home buyer assistance, and you have rental rehab, 1 to 4 units. That's your activities. If you have an approved housing RLF, every dollar that comes in from one of those 3 activities that you did in the past, all of that money must go into your housing RLF. And it must leave your housing RLF for activities that are the same. So you cannot put an economic development loan payment into your housing, and you can't put housing, if you have an RLF, into your economic development RLF. And you can't put housing repayments, if you have a housing RLF, or economic development RLF money into program income. I.e., you cannot put it up here. The $30,000 up here is theoretically, because in this scenario, this jurisdiction has housing RLF. They have an approved housing RLF, and they receive $200,000 in housing RLF. This $30,000 up here cannot be housing payments. that was right. So once you create a housing RLF, then the proceeds for that RLF must be put in here and must be spent in here. Okay. Are there any other questions?
Yes, here we go.
Oh, we have another one.
Are there specific forms to fill out to defederalize if we have chosen not to continue our RLF?
No, the only thing you need to do is use this space at the top to say you intend to utilize it, so you put a yes. You put the amount of money you received, let's say $5,000, and then you have no money in here. You can't have any money in here if you have money here. The other thing to remember is that $5,000 cannot come from here.
Yeah, and I did grab another one.
You cannot defederalize, which is not the correct term, but we'll keep using it. You cannot defederalize that $5,000 if it came from a housing RLF because you have a housing. It can only be defederalized if it's program income.
Yep.
So if you remember earlier, there was somebody who said, we have a housing RLF and we have no other money that's housing RLF. If they came in that particular jurisdiction, received $5,000, and during this period, then they cannot put the $5,000 here. It must always go here. Housing RLF cannot be defederalized, even if it's just $1.
4 pages. This is a lot. Do that.
There's one more question. We receive loan payments from loans issued previously from both, from both open grants and PI. If we no longer have a housing RLF, would those repayments now be listed in Section 1, PI?
Yes, if you do not have a housing RLF, in other words, both of your, if the answer to both questions is no and no, then there cannot be any funds listed down here. All the funds have to be listed up here. So, and just to give you a visual on the GA, you will notice that there is no received GA here. If I put in 200,000 here, you will not see that GA number change. That's 200. Let's do 200 here. If I put 200,000 in here, you will see that you have more GA available. So you cannot get GA from money in this location. You can only calculate GA from this number. Any other questions?
No, I'm just on it.
Okay, everyone. We're going to go ahead and stop. Thank you all for listening to this. Feel free, I believe in our email out, we gave you a name of somebody that you can call if you have questions. Alfredo?
Oh, that's a report to be online.
The report is online.
And the recording.
And the recording of this will go online ASAP, maybe in the next week. We'll have it online. It will be saved in 2 places. It'll be in both places where the report is now. It'll be in the Grant Management Manual next to the report, and it'll be in the Forms and Report area as well. So you can have it in both places. Thank you, everyone, and we'll do this again January the 8th.
Oh, God.